Better put the microphone over here. Hello, everyone! Screwing up the Daily Brief intros as usual. Anyway, good morning, everybody. Welcome back to the RationalInvestor.com's Daily Brief. Should be a funny intro there. Screwing up the Daily Brief intros as usual. Anyway. Welcome back to the Frivolity. It is, hi, Peter. Hello, God morning. Is it a God morning? Oh, jeez. And hello, TRIers who are in the lounge, just being silly. People saying good morning and stuff. But it is Monday morning. TGIM and all that. It is Remembrance Day. I don't know whether Europe celebrates Remembrance Day. But, we usually it's the 11th minute and the 11th hour, the 11th day, the 11th month is our sort of Remembrance Day. So locally here on the West Coast, of course, they've probably already done it back east, but you can imagine quite a bit of market attention should be focused on that today. And I do see that in the market this morning. Things are very quiet. Not dramatic percentage moves on anything really. And as I said, it shouldn't surprise us that attention from our society is directed elsewhere. If anything, that's a good thing. As you can sort of see from our breadth indicator, and it's nice to see Stuart's got this up and running again. We actually did flash a fast sell signal in the stock market, actually the broader market. And you can see how that last double bottom in the fast signals and the crossover, and then the double bottom in the slows, that really set the base for that rally coming out of early October. Woulda, coulda, shouldas. Sure wish I had this up on the screen when I was contemplating liquidating those S&P puts. But nonetheless, as you can see, we've rallied right back up breadth-wise. We didn't get necessarily overbought. Readings above 75, 80 are overbought. But you can see, we got up there, 71, and then on the fast we got up as high as 70 and change, 76. I think it makes sense that, we should probably be looking for a bit of pause in risk on, given this picture. And if we look at the S&Ps in particular, you can see we're right up at the top of this megaphone. We also had this beautiful symmetrical triangle that you can see we sort of bumped up in against that. Maybe we go a little bit higher here. Tough to say in the short term. No real sell signals here, but at the same time too, does it make sense that maybe things need to take a bit of a pause? Where do I have that chart? Kind of around here somewhere. There it is. So this is a 4 hour of the S&P 500. We've talked lots about this. This is just gap central. And probably, we even talked coming out of October there that sort of your tell of the health of the market is going to be how this gap, how price acts at this gap. Do we just blow through it? Or is this key support? And I got a funny feeling this is probably a good sort of key support level for us to keep in reference going forward. So if we do get any sort of serious pullback, I'd be watching for this 293 area here on the S&Ps. So interesting, when we look at the sort of market state, if you will. The Fed has basically, and their policy of late has been pretty much the same, but they've once again sort of said, okay, we've given you everything that we think you should get, and now no more. Now, of course, they're data dependent. If the data continues being absolute train wrecky, then I suppose they can come back in and cut more, but I get the impression that the Fed, the U.S. bankers, would really like to not cut rates anymore. And with stock markets at new highs, I mean, gee whiz, this is a funny situation we're in here. So I don't think we're going to get any help out of sort of like short-term interest rate policy direction from that direction. Um, and then, probably the thing that caught my attention the most over the weekend was the, and I'm not quite sure if it was actually like a policy change or, whether they've decided to turn up the temperature on Mr. Trump or not. But I saw over the weekend that they announced that the hearings, the investigation, the impeachment, soap opera, for lack of a better word, it's actually now going to become public, and they're going to have it on public television. These hearings. So get ready for this soap opera, and maybe that's what drives the market lower here. Is probably gonna have like a week or two of just let's beat up on Mr. Trump. The interesting thing, unless they find some sort of smoking gun, which is what I think they're trying to do. I don't think you have enough of a case to actually go ahead with impeachment and all that. And a number of U.S. Republican senators I saw over the weekend said there's no case here. So it's all smoke and mirrors, and really what it is kind of like what Mr. Trump has said all along, is this is basically a witch hunt. They're trying to dig up dirt, and what we all should remember, ironically enough, what didn't the original sort of scandal around Mr. Nixon, that actually didn't lead to his demise. What led to his demise was stuff that came out of these hearings. And to a certain degree, I remember actually back in the 1980s, I don't know whether we have any old timers here on the call, but I don't know whether any of you guys are old enough now, but do you guys remember Iran-Contra? Oliver North? Any of you remember Oliver North? So this is that same sort of thing where, oh good, okay, you guys do remember. Where, they're just going on a fishing expedition. Can they dig up dirt? And can they get somebody to actually implicate Mr. Trump? And I find it interesting that the Democrats have decided to go the route of making this public. And in a weird sort of way, if they don't find anything, then in my opinion, actually, this is probably going to completely solidify Trump's win of next year's election. So it's almost like they're going for a Hail Mary here. And frankly speaking, we talked about it last week. I don't see anything out of the Democrats, the sort of opposition in the states, that actually is a realistic challenge to Mr. Trump. I can tell you without a shadow of a doubt, ahead of elections, talk of socialism, raising taxes, and, changing the fabric of the United States of America, it gains public attention, like Senator Warren right now is doing this. Talking about soaking the rich and all that kind of stuff. But when it actually comes to election day, I've never seen anybody ever vote for raising taxes. So, it sounds good on paper, but at the end of the day, when people go to the polls, I've said this before. How do you knock out an incumbent? Incumbents are actually extremely difficult to knock out in democracies. It's either got to be some sort of horrific scandal, or the economy's got to be in the shitter. Stock market at new highs, that's not economy in the shitter. And the data of late, I don't think it's actually bad for the states. It's bad for the globe. And I think, areas like Europe and stuff, we've talked about that. I mean, they look in bad shape. I would not be buying real estate in Canada right now. That's for damn sure. And interesting how you can see, Australia and all the down unders, their real estate prices are just as ridiculous as here in Canada. And interesting how sort of natural disasters now are going to actually maybe start bringing all that back into check. And if there's wildfires raging in downtown Sydney, people might go, maybe I don't want to buy a house in Sydney anymore. And we might find that actually acts as a self-correcting mechanism. And it's kind of like, the same sort of thing I see in California, wildfires, absolutely out of control, people dying 1,000 deaths. Well, that's the easiest way to sort of, cool the real estate market down. Actually, it heats it up, but that's another conversation. So, all in all, because of Remembrance Day, I'm not really expecting a heck of a lot out of the market. And we sort of start off our conversations. I like to put the words right over where the markets are when I first get up in the morning and then just see some sort of movement. By the time we get to this daily brief, you sort of get the tone for the rest of the day, and you can see gold's actually moved a bit lower. Bonds have moved a bit lower. Yen's actually, it has come down a little bit, but at least it's showing signs of some sort of floor. Stocks have backed off. Actually, they've come back a little bit from where I first put that, but they're backing off here right out of the gate this morning. Oil was down a bit more, but as you can see, they brought him back a little bit. And good old Bitcoin just being an absolute pain in the butt here through the weekend. Continuing its topping out pattern. And, the sad part about it, is this is often where the short-term trader gets sort of run over because of really shitty trade location. But the overriding message that I tried to impart on things like broiler chickens yesterday. And somebody even said, if we fail here, isn't that lower highs and lower lows? And you're absolutely right. I mean, the inside bar did fire on Bitcoin 2 weeks ago. All right, well, I guess middle of last week. And now, interestingly enough, on Bitcoin itself, if we just simply hide the index, I don't know whether you guys can see that. But we're starting to get even more sort of, problematic situations here on the corn. So, I wouldn't be surprised, believe it or not, if stocks and oil actually have to play a little bit of catch up to Bitcoin. So on top of the fact that we have that political situation going on in the United States right now, and I was reading this morning, I think they said something like 470 of the 500 companies in the S&P 500 have reported earnings now. So basically earnings season is behind us. So what's going to be dominating the news headlines? Well, it's going to be all this, Trump sort of, impeachment inquiry stuff that doesn't really go anywhere, I think, unless somebody says something absolutely horrific and, some sort of bomb is dropped. But I think a lot of this now is going to revert back to, what's going on in China, trade deals. We got, and the worst part about these trade deals and stuff dealing exclusively with Mr. Trump's executive is you can't believe any of the shit that comes out of his mouth until actual signing of papers. So last week we saw the stock market was getting bid up, and the news headlines were Mr. Trump says that phase one of trade tariff talks is underway, and we're going to cool things down, and come out this morning. And the son of a bitch goes, oh no, well, actually everything's back on hold. Nothing happened. So in essence, everything that he said about these trade deals in phase one and all that kind of stuff, it's all bullshit. Which really, talk about Mr. Fake News. And of course, this is going to piss off all my American audience and stuff, and I'm sorry. But he is like Captain Fake News. And the market moves off of this stuff, and yet it's all smoke and mirrors. So I don't think anything's really been done on this whole China trade shit. I don't think anything's been done. Even though, they come out and say, oh, yeah, well, the news headlines today are, oh, now doubts about China trade. And then you look at the situation in Hong Kong, and oh boy, it's getting out of control now. So I'm getting the feeling that, the love affair that was sort of developed with China over the past 10, 20 years, that's starting to unwind. Of course, Mr. Trump he sort of got the ball rolling with his presidency and stuff. But it sure feels like the winds of change are blowing there. Something has changed dramatically on that front. The question, I suppose, now is how ugly does ugly get in Hong Kong? I'm hearing that people are actually dying now, which really sucks. God rest your souls. And people are getting shot and stuff. So, the weird thing is I remember specifically the 1986 Winter Olympics. Anybody remember where the 1986 Winter Olympics were held? I wonder if anybody even remembers that. That's going back a few years. Excellent, Andrew. Yeah, you remembered it. All right, good. Peter remembered it. Bosnia. So anyway, the point there was in 1986, Sarajevo was actually sort of billed as sort of the utopian society. And this is when a country called Yugoslavia was still in existence. And the irony of it all is it's kind of old news now. I mean, people don't even remember it. But, Sarajevo and Yugoslavia, the utopian dream kind of thing, it all just disintegrated and it turned into just an absolute nightmare. So, these things do happen in our world. You can't write stranger fiction than reality. So, I mean, I don't know what the hell happens with Hong Kong, but I can tell you, and you guys tell me, I mean, just simple economics 101. Is that kind of an environment that's going to spurn more economic development, more economic activity, more business loans, more growth, or are people going to go, you know what? Maybe I'm going to head back into my turtle shell and try and just ride this out. And I actually saw economic data coming out of Hong Kong itself is actually showing that the economy now is officially contracting there. So that really shouldn't surprise any of us. And now, my hunch is, well, not my hunch, but I was reading over the weekend, I sort of mentioned in the Broiler Chicken show, was, oh my, now Taiwan is being slowly dragged into this mess. And there's a movement in the U.S. Congress to officially recognize Taiwan. If that gains traction, oh boy, China's not going to be happy about that. So, put it all together, Latin America, yeah, holy moly, Chile. What the hell's going on in Chile? Poor old Dav. I don't know whether Dav's going to make it. I sure hope he does. But yeah, we're getting a lot of social unrest out of Central and South America too. So, I mean, I suppose it's interesting. We were looking at things like Mexico recently, and they've sort of dodged the sort of focus of late. But I'm not even quite sure what the end game for South America is, like with Chile and stuff. So, Dav and all Dav fans and stuff who are watching this, take care, be safe. Okay, so, Remembrance Day. I think it's actually a pretty quiet day. I noticed econ-wise, things are extremely light on the economic release front. In fact, I didn't even, I didn't even see any American econs of note here this morning. So things are pretty quiet across the board news-wise. And as I said, we're done with earnings season, so... Dow's down 14 points, Nasdaq's down 8, down 20, and S&Ps are down 8. That's the kind of morning that I'm sort of feeling. It is here. I don't know whether that helps you guys. I sure hope it does. But That's sort of what I'm thinking there. Our conversations about things, and I should probably mention, and I suppose I've been blabbing away here for a while, so my apologies, everybody. But Seward usually comes on the call first thing Monday morning. We had a fairly lengthy team TRI meeting here this morning, so he had to pop out and grab a bite to eat. And he said that he'll try and make it in here before the end of the daily brief for your Monday site update report. Risk on, risk off. You saw the gold was moving lower. Still watching these gold stocks and gold indexes. I don't really see anything to get too excited about here this morning, so just a big hurry up and do nothing there. Interesting to see bonds, are pressing their lows. Tough to say if the stock market rolls over. Maybe we can enjoy a bit of a counter trend rally. My option here has gone up appreciably. It is basically an at-the-money option now. But I'm looking for this 50% level to be tagged, so I want $5 on my option. So really, I'm not going to touch that until I see either, that level or we start getting close to the expiry. But of course, it's a March option, so there's really no hurry to do anything there. Yen just floundering. And of course, our poor old gold bugs. We got a really, really nasty message from the bullion itself with the close below this key closing low. What is that? That is 1472.90. So we closed 1466. So we actually have 2-bar confirmation of this signal as well. You can see the volume was ramping up on the sell-off, on the breakdown. So there just is nothing for me to do here right now. And, look left. Oh, my goodness. Probably all of these lows now are sort of key support. This pivot low here, that gap actually technically filled in for candlestick people? No. And then, of course, this is wide open here. So my hunch is probably down into these lows is where the market wants to go. And then, if we keep looking left, the worst part about this is there's just so much crap. Look at this big hole here. So there just isn't anything to do there on the gold. Just a big hurry up and... I don't even know if we even have many bright spots to get excited about here in the stock market. We were sort of taking a look at a few ideas here this morning before we got the show up in earnest, but you can see breadth-wise, there's some gainers and nothing really to get too excited about. Some pharma names are pressing their highs, so that's good to see. And little oil names that we took a look at recently, bought weekly Ws, they're pressing higher, so that's good to see. Kevin's little idea here from recent, we'll watch for a bottom. You can see the momentum divergence now is forming, so I'm going to keep an eye on this guy. But really, there's just nothing for me to do there right now. We talked about gold stocks and stuff, so, I'm going to keep a close eye on this little Alio. You can see the divs coming in, maybe like one more final dump there in the gold price to fill in the gaps, and maybe we can start turning. But again, there's just nothing for me to do here just right now. There is a bit of red on the screen today, so don't be surprised. Again, pharma names sure seem to be in the spotlight of late, so I like the pharma names. Also too, if you are interested, especially if you're interested in like specialty retail kind of names, now I've got and I bought the David's Tea. I just bought the stock down at the bottom there. So interestingly enough, I'm actually building my long beverage portfolio out here. But if you are interested in these junior names, I kind of like this Java because it's got a pretty good structure. Maybe I can just quickly show you what I'm seeing here. $5 million shares out. That's pretty light. Target price on the streets $9. We're basically a double from where we are. EPS this year up 133%. EPS quarter over quarter, up 600%. Holy Jesus. Carrying a little bit of debt. I don't like that. Now, if their earnings weren't increasing, you'd be like, holy crap, that's a horrible PE. But, if they actually deliver on that earnings growth, then, these are acceptable numbers. Unfortunately, no options available on this guy, so that's why I had to go buy the stock. But, hopefully everybody looks at this and goes, okay, well, I can see the W's. I can see the big old hole in the chart up top here. I think that makes sense. So those are the kind of names that I'm really interested. Some oil names, some pharma names, and some specialty retailers. I keep an eye on these shipping stocks. I mean, they look weak right now, but if you are interested, that's another area of the economy that I kind of like right now. So, there is this Navios. They've got a pretty slow share count as well, but also keep an eye on Kevin's little Sino. Of course I'm long both of these, but let's just, where the hell's that down? 76 cents. Considering that the broader market looks the way that it does, this actually doesn't look too bad to me in here. So you can see money is pouring into this thing. So it was actually interesting. This morning I was looking at these pot stocks, and I actually posted in the lounge, hey, check out these pot stocks. They look really interesting. And then this morning, right out of the gate, they all got whacked back down. But, if you do play W's, hopefully you can see the bull div on the weekly charts in MACD. Willie is technically stupid. And I think, actually, this is a pretty simple trade. And you guys see, that's a pretty well-established ceiling there. So, in fact, I'll make a deal with you guys here. If this thing breaks out through this 514, I'll go buy some. And just simply risk against the W. It's pretty straightforward. So let's keep a close eye on these pot stocks. If you want to inject a little bit of FA, go maybe look at the names. Try and find the ones that have the least amount of shares out, and relatively half-decent earnings, that kind of stuff, insider ownership. I'm not going to comment on the fundamentals of this story. This is just purely a technical play. So I am interested to see whether those pot stocks actually find a floor. But other than that, and if anything, what I've kind of noticed is we are now officially through about halfway through November. So that means we can start thinking about things like VCIM. So, probably over the next month or so, I'm going to be watching. This is just a screened list. You can see it's about 60, 70 names. I just did a really, really simple screen on the TMX site. Delete that. In essence, these are stocks that have less than 25 million shares out. So you can see here's the shares outstanding count. They are trading less than book value. So you can see all of these ratios are under 1.0. And I also just on Google Sheets just created a simple 50% rule. In essence, 52-week high plus the 52-week low divided by 2. And then just simply asked, is the current price less than, here, CHC, it's 50 cents. And the 50% rule right now is sitting at $1. So is it less than half of what the asset will be at the 50% rule? Or basically that idea of can I double my money if I go and buy this asset? So on just a simple 50% tag, and buy when it snows, sell when it goes. This is exactly what we want to be sort of building, like probably over the next 3 or 4 weeks. This is where we want to. Not we. I mean, you follow your own plan, but I am definitely going to be watching these. So we'll just say last 52-week high, 52-week low, shares out. What's this one? This one is, how did I do this? This is price to book. And of course you want that under book value. This is 50% rule. And is price less than 50% times 2, right? No. It's price less than 50% times 0.5. Okay, so there is that, and it's is here. Let me just format. Is VCIM, is investing in venture cap names? Is this in your wheelhouse? We'll just call this VCIM screen for November 19. Obviously at this point, we want to anyone with a link can view it. I think that should work. We want to now, of course, go and ask whether these companies have done shares for debt deals. Have they vested stock to directors in the form of options to directors? Do they have anything actually on the go? Maybe check out their website. Most of these, especially things like .h's, we can disregard those. And these guys, we can get rid of those. We might talk a little bit about this if we have some time in VC in TRISOF meetings, if there isn't much to talk about there. But in essence, this is this isn't, especially for those people that are in Canada. And if you're in the States, a lot of these companies will have OTC listed stocks on things like the bulletin board. So, there are ways for the American audience to participate. But you should be able to load up a nice little, like on Interactive Brokers, if you're overseas, you should be able to get access to these. So this is, and I'm kind of half doing my research here with you guys for the day, but this is basically what I'm going to be focusing in on, taking a real good look at some of these names. All right, well, that cleans up the list a little bit. So, keep an eye out. 51 names. So that's, once I'm done daily briefs and stuff like that, this is going to be something I'm going to be working on over the next few days, and I'll start. If you're welcome to copy this. I mean, me. If it's a good trade, then I want everybody to know the information. And we'll work away on this over the next few weeks. Let's delete that. Okay, so we'll go. Okay, so, and I've shared it, so feel free to take a look at it if you're interested. Okay, so, like I said, stock market, it's Remembrance Day, so I think on balance, I think that basically summarizes what we're seeing out of the market. And then, we've got U.S. congressional testimony that's now on live public television. That's going to dominate. Not that much in earnings news now, so that's over. Fed's not really dovish here, so it's not like we're going to get a heck of a lot of help out of them. So don't be surprised, people, if stock market actually has to go a little bit soft here. I would be surprised if we really rallied hard here. Interesting conversation, and I thought I ought to mention this because it was an interesting note. Somebody, I don't know whether it was in the lounge or one of the school classrooms, somebody had posted this interview with James Rickards, How to Avoid the Next Market Crash. I think he made actually, I'm not going to necessarily endorse what he's saying here, but one thing I will say is that he did make an interesting comment on interest rates, and he did make a really interesting observation in that when we look at interest rates, and most of the public focuses on yield, and we need to understand that a bond that say let's say it's yielding 10%, and that movement from say 10% to 9.5%, well, let's go say 9.75%, so a quarter point move. The bond price itself, from such a lofty level, 9.75% or 10% down to 9.75%, the bond price itself won't move a heck of a lot. Because what you have to think about is what is a quarter point in reference to the starting rate, 10%. So, that's barely over, 0.2, a quarter of a percentage point of the actual yield itself. Versus a change in rates, let's say from 1% to 0.75%. What is the magnitude of that quarter point move? And obviously, that's 25% of the interest rate. So from a bond price perspective, you're going to have a much, much bigger move in bond prices on that move from 1% to 0.75% versus 10% to 9.75%. And I thought he actually articulated that really well. So, with that backdrop, it actually makes sense why, and probably the best way to look at this is through bond pricing. Right? It actually, we look at this chart and we go, holy shit, it's going straight up. It's parabolic. It went from 130 up to 150, 20 points of capital gain profit. What a huge move. And yet interest rates really didn't move that much. So I thought it was an interesting side to this to try and explain why there's such an appeal for capital gains in the bond market right now. But I have a problem with this thinking. And I actually put a tweet out to that effect yesterday. In that, does it make sense? And the tweet that I put out was, first and foremost, have any of you ever met government officials who actually can predict the future? Have any of you guys ever met anybody who works in government who actually, that can predict the future? Anybody on YouTube, have you ever met anybody in government who actually is looking out as to what the future is going to hold versus reacting to what has happened in the past? And I think, I was talking with the level 3 class recently about trading seasonality and how governments act around their fiscal year ends. They don't think straight. They actually think really stupidly, interestingly enough, from my opinion. And here's a great analogy. Hopefully I won't take up too much time here. But when I was at Transport Canada, it was all around that 9/11 stuff. And, Like if you think about what happened with 9/11, and I made the argument at that time, of course, it was extremely unpopular, but I had sort of suggested that what if 9/11 itself was the ultimate expression of these terrorists? That was the big hurrah. And when I was because remember when I was at I don't know whether you guys know this or not, but I used to through the 2000 .com blow up, the brokerage industry just went absolutely shit, and of course kind of like what you're seeing in altcoins over the past year or two. Brokering business was extremely lean in those days because nobody was interested in buying any stock at all. And I had to take a part-time job, right, on the side and try and make sure the bills were paid. And this was right around when I turned 30, and Liam was just born then. So anyway, the point that I'm trying to make here is when I was at Transport, I ran the video conferencing calls for their executive committee here in Vancouver, and it was part of a federal agency, the Department of Transportation. And what was fascinating through that whole period was, I sat in on basically the executive committee's decision-making process because I ran the video conferencing shit. And I don't know whether you know, Canada's a pretty damn big country. It's pretty hard to put all of these bureaucrats in one room at once. But the interesting thing here was through all of those meetings, the government bureaucrats, the only thing they talked about was the next 9/11 event. And here in Vancouver, oh my God, I mean, we are so off the map. I don't even think people in Saudi Arabia even know where Vancouver is. But everybody here in Canada was convinced that we were going to be the next attack target. But, it's just an interesting analogy because what it really means is that these government bureaucracies are not thinking really correctly about the future. They were looking backwards. And that's the point that I'm trying to convey here. So when I listen to the Fed officials, remember, bankers are horrible future predictors. They always are reactionary. Remember, the Fed usually kills the bull market because they're reacting to the labor market getting stronger. They are the end of the curve, not the beginning of the curve. So everybody in the market is talking about negative interest rates, negative yields. Interest rates are going to zero. I really want the community to hone in on this. Do you think they're right? If all of these people, remember Bitcoin 20,000, Bitcoin's going to Mr. Penis Eater. Where the fuck is Mr. Penis Eater? He should not have a phallus anymore. That son of a bitch should be castrated. And he should be forced to eat his penis. Right? But the point here is that whenever the herd gets all going in one direction, I think it's actually in your best interest to go the other direction. And you don't necessarily need to take the trade, but just go, come on, let's get our head on straight here. And, somebody had posted that video, and I find it interesting that this gentleman is going this direction. I don't know why. And remember, when we deal with these large money managers and stuff like this, you always have to ask yourself, is this guy actually have a different agenda? And I'm just wondering whether this guy is long a shitload of bonds and he's trying to either talk the market up or he's trying to get enough buyers to come in to actually buy his bonds off him. I don't know. But it just seems a little bit irresponsible to me. And this is just me, an old gnarly market participant. And just out of curiosity, I said, okay, well, what are interest rates actually doing here? And actually, when you look at this image, interest rates are not doing what all these public officials are telling you. They're lying to us. Interest rates are not going to zero. And I'd actually make the argument, interest rates are actually not trending lower anymore. Can you guys see that? I mean, I don't want to get all emotional and excited here, but the simple fact of the matter here is actually getting sucked into this, and it's become like an orgy. Every government official now is, oh, zero interest rates. Oh, interest rates going to zero. Negative interest rates. Oh, Aaron is negative interest. Well, I hate to tell you, but number one, 10-year U.S. T-notes, treasuries, basically the proxy for the interest rate market, it's tried on 3 separate occasions, and you notice seasonally the market likes to dump into the summer. Why? Well, because that's the weakest economic period. So you can see July 2012, they tried to take it down. Nope, couldn't get through that floor. Then in July 2016, they tried to take it down through that floor. Nope, couldn't get through there. And ironically enough, I don't know, has anybody ever seen this Beamish guy talking about a letter of the alphabet that actually confirmed here? Is there a letter of the alphabet here that kind of this Beamish guy likes to talk about? Anyone? I don't know. I mean, maybe I'm hallucinating. Maybe I don't see this. The funny thing is, there's a big honking W working here, and we just came down, tested that low again, and good old Brian's in there actually shorting that rally. So I got a funny feeling that they got it wrong again. And I really don't think it's in your best interest to get sucked into this. Interest rates are going to zero. That's an old story. If anything, what I see here is I see a market that's gone one directional now for 38 years. And, you know, we talk about interest rates are 70-year cycles. So that means that technically after 35 years, oh, gee whiz, isn't that kind of like 2 times Brian's 17.5-year generational cycles? All that kind of stuff. But after we get beyond 35 years, we actually should start thinking about the other direction. And, you know, I'm just worried, and it doesn't surprise me that everybody in the public, all they're talking about is negative interest rates. Of course, they don't understand how the bond market actually works, and so they're entirely focused in on short-term rates that the bank actually pays. Remember, guys, we never see Fed fund rates. I mean, does anybody know? Casey, are you on the call? What's the prime rate here in Canada? Casey's usually on the call here. He's over in Victoria. He always knows this stuff. Andrew, you're here in Vancouver, aren't you? I don't know. I caught you. Anyway, somebody Google the prime lending rate here in Canada. I can absolutely guarantee you it is nowhere near this whole sort of, you know, Fed funds, what the bankers pay, right? So somebody says here 3.95%. Is that negative interest rates? That's not even remotely close to negative. So, you know, that's sort of my public service message for the day. But the irony of it all is, do you think the public really pays attention? I believe the market is actually trying to talk to us right now. But on your long bonds, Stuart, so you just jumped into this call. So you've kind of missed a big chunk of this conversation here. But I would actually make the argument that thinking about negative interest rates, I would actually argue that we should actually be thinking about rising interest rates now. But I'm not talking about what the bankers pay. Because frankly speaking, we're not going to get banker rates. I'm not so sure about that. And really, I'm thinking more along the lines of U.S. Treasuries as the benchmark. Because, you know, if this market breaks, then all the other world markets will all start piling in on the same side. And really, what I wanted to convey to you guys is, do you see the market's message here? This is not trending lower. At best, we can say this is a narrow sideways channel. But I would actually make the argument we're actually seeing signs of the market trying to actually confirm a bottom here. So that's sort of Brian's rant for the day. Okay, I do see Sjord is back on the call. And actually, while Sjord does his presentation for us, and I always like Sjord's unique perspective of things like Bitcoin and his use of RSI and Bollinger Bands. So I don't know whether you had a nice full meal. Are you full of pannacooks right now, Sjord? Do you have a microphone?
So many pannacooks. So many.
All right. Cool. So,
Piles of pancakes.
would you like to share a screen here, or do you want me to put
Yes.
on a certain screen? What do you feel like doing?
Let me share my screen.
All right.
And also, maybe another reminder about feedback for the notification channels.
Mm-hmm.
Well, I'm looking for the screen to share.
Okay. Yeah.
Uh,
So, as Fjord's getting ready here, I'll just show you. I took a couple bot trades over the weekend. Didn't really go so well, but I did follow my plan and I exited according to plan, so that's good. So this is up and running right now. Is this what you're referring to, Fjord?
yes,
Yeah.
exactly.
Okay, so I will put on your screen and I'm going to minimize mine. And you, sir, have the floor. Tell us what's on your mind today.
Okay. Just a quick check I always like to do on Monday. And what I see is that the recent balance sheet trend of the Fed is still pointing up. Woohoo! But I'm just going to keep watching this till I see it stabilize or turn down again. But this was another week of rising printing dollar bills. And I don't have much more to say about it, but I'm just going to watch it and keep reporting on it. As for Bitcoin, where the real magic happens, let's see what we have there. Let me clean up my chart real quickly. Uh,
You're trading
there
off
we
the 1
go.
minute charts, eh? Wow.
Sorry,
Said you're trading off the
one
one
minute.
minute charts?
Yeah, nothing beats a good 1 minute trade. I mean, I didn't even go to the 1 second yet, but that's where the real money is. Okay, so let's turn up the Bitcoin chart. Okay, so maybe let's continue on the daily first. What do we have here? Okay, so and I think the message where I left off last week is that I was like, well, I don't see a big move up. I don't see a big move down. I see a bit of more sideways. And that should have been around here, I guess. But when I had to choose a side, I would go bullish. That's what believe I've said. And overall, something changed. And what did change is the fact that the RSI is trending lower. And the MACD flipped negative on our daily. And the really crossed. So now I would more lean to the short side on the daily, that is. But again, no trade here for me to take. And let's go to the different
Was
time
that
frames on the
would
four.
that RSI move outside of the band? Would that have been sort of a potential short
Yeah,
for you?
yeah. So this, if I would have gone short, this would have been the signal.
Yeah.
Or when we now will break this midline. But the same comment that I made last week is, I mean, it can go both ways, and it always can, of course. But I mean, the width of this Bollinger Band is just so wide that I don't see pressure building for a big violent move. And sure, we did move some good few $100 here. But this is not the moves that I would be trading. What
Cool.
I want to see is a long build up, pressure building up, and then a release of that pressure
Mm-hmm.
in either up or down direction.
Yep.
So, for example, here you can see we played a bit with this line, but then we crossed here as well, and we got a breakdown here. And these are the moves that I want to see. And for me, this is just too wide of a range to trade on.
Mm-hmm.
And maybe you can do some swing trading, define the support and resistance, and then play a bit in that range
Tell
on the
you,
lower
man,
time
this
frames.
weekend was a bitch, right? They really screwed both longs and shorts.
Yeah, yeah, they did. And let's maybe take a look at the line chart. No, nothing that really jumps out of it. Besides that, I see more M than W action at the moment.
I see a lot of happy faces there. Oh boy.
Yeah. Then on the 4 hour, same issue with the Bollinger Band. It's just too wide for me to take any action. The MACD flipped negative, so that would mean some bearish action or more leaning bearish. But at the same time, because of these bonds that are so wide, and you can see that the RSI channel is basically, well, just a bit like flatlining again. So I think we need to calm down a bit and give the possibility for the market to build pressure and then go towards the next big move. So what we in the situation that we are now resembles a lot more like this action here, where we basically didn't do much, right? And then you can argue, well, we didn't do much here either. No, that's true. But this is something that I can work with, and this is something I can't really do much with. So I just need to sit on the sideline and wait for the market to start building pressure. On the 1 hour, what I'm seeing here is that this would have been the area to hunt something. You can see that we briefly went nope, back in. But this would have been a trade for me because the MACD is that negative. So ideally, I want the signal of the RSI that goes into the bands to be confirmed by the MACD action as well. Now, do we want to do the 1 minute? No, it's just
I'm short. I'm long. Short.
Exactly. But that's basically what I'm seeing. So it's not much of a clear direction for me. I would just be, and I am just sitting on the sidelines, dollar cost averaging. But there's not a clear trade for me that is setting up. If I would have been forced to choose a side, I would tend to lean a bit more down now on the higher time frames, a bit more retracements, but we'll see what happens. So that's my market commentary.
Excellent, good stuff, dude. All right.
Is there anything else that we need to watch, or shall we leave it at that with the full hour?
Do you want to comment on, your, especially for the European audience, this would be kind of cool if you could just, give us your thoughts on how your Netherlands stock index is doing.
Yeah, sure. Let's see how I'm getting punched in the face day by day.
Oh no.
So from a winning streak, I went to a big losing streak.
Great. Everybody make note of that, right? Do you guys remember Sjord was like on 11 in a row and he was like, oh, geez, this sucks. And it's like, you're killing the market. I know, but I got to go through a losing streak now. Don't you hate statistics?
So the issue, what I have is that and I can't use the word feel, right? Because we're not in the business of feeling the market. We're trying to look at it rationally. But at the same time, what I'm seeing is that the Dutch index is moving faster up than the other indexes. And this is on a daily basis. And you can clearly see the trend is up. Yet I am short, and I'm still short. And I've set my stop at 603. And you can just see that we're getting into some resistance trouble area here. What I think what will happen now, and of course I'm a bit biased, but I think we need to take a step back and then basically just launch higher to break that 600 rule, because that 600 will act like a big fat round number and a big magnet. So I strongly believe that we will just blow through it. But at the same time, I think this is a bit too much. And that's just based on looking at the other indexes. For example, if you look at Germany, you can see the same action. But at the same time, Germany is taking a little step back. I think they're going to reload and then also move higher. Rather the Dutch index, they're like, meh. let's just try keep punching up with these big fat candles. But you can see that, for example, on the 4 hour, really has been overbought for some time now, and of course, really can stay overbought for long periods of time. But what worries me is that here we went above the channel, which is not a bearish move or anything, but then we crossed in, and we're still heading lower. And you can see that the moment that we crossed out, there was pressure, so that got relieved in the market. But now we crossed back in, and the MACD flipped negative, and we're still oversold. I'm still leaning towards the short side, that we just might need to take a step back, do some more sideways action, maybe fill this gap up here, and then use that as a platform to launch higher. We have more gaps at 580, for example.
Yeah.
But
that's probably the one that lines up with the S&Ps.
I just feel like that 600 is forcing the market up at the moment. Which one should I take?
SPY? That doesn't matter.
Let's go with, where is it?
It's the first one on your list there,
yeah. I should turn this off.
You can see that big hole down there at 295, right? That probably corresponds with your gap. Actually, if you mouse over, you should probably see the line similar.
Sorry, where?
The 295 on the S&Ps, my hunch is that gap probably lines up with your Dutch gap. Yeah, right.
Let's see. This one.
Oh, okay. So that's actually all the way down there, right? What is that? That's down at 560 area? So, I mean, I don't know what your trading plan is, but if I was going to be gunning for downside targets, I like all of those gaps to be filled in.
Exactly, and I'm just like, well, you can see that we're just bouncing against the ceiling here. But it will only take 3 points to head to the 600. And if we look on the daily chart for the Dutch index, then we are basically at, 70-year-old highs.
Be interesting to see if there's any gaps up there against those old highs. And that's interesting too. Like, basically, Europe's not at record territory like the Americans are.
No. So we got still plenty of room to run.
Yeah. So, if you could focus in on that, looks like, Jesus, it's the 2000 peak, the .com peak. So we're just now getting back to .com levels on your Dutch index. Oh, that's incredible.
Yeah, but I feel there's a disconnect between the Dutch index and the other worldwide indexes.
Yeah. It'd actually be interesting to see, like, how many stocks are in this index?
20. Oh, I don't know. Out of the top of my head. This is so bad.
Guard. But, it might be interesting to see if who are the big drivers in the index.
Yeah, 25. 25.
Okay.
Yeah, and what I noticed, because I'm a bit more trying to day trade and see how the market behaves, there's this one fun Dutch stock, which is a chip maker, and it's called ASML. Here it is. And basically what they do is they overreact to everything. So if Donald Trump or we just get some Europe news, this ASML stock, it will
leading indicator?
It will give direction before the index turns.
And that makes sense too, because the SOX is supposed to be the ultimate stock market leading indicator. So same thing in Europe.
Yeah. So that's what I'm watching. So I'm hunting a short here. Well, I have a short open, and I'm not trading on the daily and the weekly time frames, because the weekly, to be honest, we still have room for more here. I feel like, with a nice W action in the RSI, but I think it would just be healthy to do a little step back on the lower time frames. So yeah.
Okay, thank you for your report, sir. I appreciate it. Do we want to reference anything on the site?
No, so if you guys have just that, if you have any feedback about the notification channels, please let us know. We're going to work towards a format that we will start using more and more in the future.
Okay. Any new
Okay.
toys or anything for us to look at on the
Good
site?
one. Not to show, but that's another one. If you feel like that you want to build custom screeners, please, and maybe I will regret this, but let's see. Please direct message me with your top 3 indicators that you use and would like to be able to use in the screener tool.
All right. The gauntlet has been cast. Get ready for the flood.
Exactly. Okay,
Okay.
that's all it for me.
Yeah, like guys like Daniel Riviera. Daniel, if you're watching this, reach out to Sjord because he's building some kick-ass day trading systems. So if we could replicate what he's doing, I think that would be great. All right, we're well past the top of the hour. Hopefully, we've given you some nuggets of wisdom to add to your tool belt and your thinking for today. As we've sort of said, today is it's a semi-holiday. It's kind of a karmic holiday. It's a Remembrance Day. So I don't really anticipate a heck of a lot going on for the rest of the day in the market. And as the screen sort of suggested here, it's not really any clear directional moves on, risk off. We're probably going to have to wait a little bit to get some clear direction here. So, okay, everybody, thank you very much for your participation. Thank you so much, Sjord, for the awesome update. And of course, Sjord gave everybody watching this a suggestion on how to help him build out the site to be more to your liking. So feel free to touch base, and I'll go take a look at those European longer rates, and we'll continue the debate about interest rates going forward here. As well, too, like I said, if you happen to be in Canada, let's take a real good look at those VCIM names over the next few weeks, see if there's any opportunities there. And other than that, Kevin and I have got to go off and do the daily brief recap report, and we'll see everybody on the site. All right, everyone, have yourselves a great day. All the best. Thank you so much, Sjord. Thank you, Kevin. Great teamwork as always. And the only thing left for good old Brian to say at this point is a big bye for now.